Welcome back, folks. Dow down 171. Nasdaq is off 51. S&P's down 24. Let's go over to Mr. Jason Pfaff, as we do every Tuesday and Thursday at 1:15. Jason, what's going on, brother?
Tom, not much, man. How are you?
Great, man. Great. Well, listen, I'm looking over your notes here, and what I can't quite understand is that when we start talking travel, dining, movies, and mortgages and malls, as we talk about them, they're having a tough time, and the NASDAQ was almost at its highs, man.
That's right. It's interesting, even the divergence between the indices, as we've talked, as everybody can see. I mean, if I look at the S&P, the rally that we've had over the last several weeks, it just feels out of gas, right?
Yes.
I don't see any momentum. I see no cause for momentum. But the NASDAQ tells me, again, I say it, and it sounds so simple, and it is simple. Money has to go somewhere, and a lot of those big tech names are still attractive in such a uncertain time.
Sure.
People are still going to be online. They're still going to need to advertise. We're still going to use Microsoft software. But clearly those names that are sensitive to anything to do with the consumer and the traditional consumer-oriented service economy. Again, the term I continue to use is just radioactive. I don't know how...
Yep, there's no doubt. And, since last week, you brought this up, and I thought this point here was, like, phenomenal because, we've been talking about it all week on the network. And what it's about is, like, your first topic, travel. Because the government didn't shut down travel. We decided not to travel, right?
That's right. I mean, I'm on the phones with guys today saying, hey, when we can all fly again, it's like, we can fly now. We just don't want to.
Yeah.
And the other piece, I do not believe folks have thought through well enough. Again, simple concept, but you really got to spend some time gaming this out, is all of the secondary, third order, fifth order effects of that.
Right.
The businesses that depend on, airports, travel.
Sure.
It's just a huge cascading effect. Again, even in oil markets, we talked, last week, material double-digit percentage of oil consumption in this country is jet fuel. And that's just not coming back for years.
Right.
We're at 10% right now where we were this time last year in air travel.
Well, I'm looking at this number you sent over. So listen to this, folks, okay? So on May 10th, there were 200,815 travelers compared to a year ago of, 2,419,000. I mean, that's pretty intense, man.
That's right. And we've been consistently between 190 and 200,000 on a daily basis. So it's not like it's getting better as we progress through the virus. It's just not. And, as we see a rally start to run out of steam, unemployment continues to escalate. For the second half of the year, anything sensitive to the consumer from an equity perspective, I personally want to stay away from, because it's going to get worse economically.
Yes.
Everything that we've responded to date has been the shutdown, right? None of us have seen the effect yet of 25% unemployment. And by the way, none of us have ever been alive in an environment where we had 25% unemployment. Hiring is not picking up.
No, there's no doubt. Well, it was interesting. One of the tigresses in the den was just saying, do you think that when the Apple stores open up that everyone's going to go and buy an Apple phone? Now, what's so deviant about this, folks? I can picture that many people will, because what's happened is that you get the $1,200 stimulus, then you have the unemployment, and in Florida, people haven't been getting it, so when they get a check, they're going to get a check for $5,000, $6,000, $7,000. So I can picture at the beginning that they because let's picture when we were kids, you didn't know that, okay, then the spigot's turned off, and then what do you do 2 months from then, after that? Do you know what I'm saying?
Yeah, that's right, yeah.
Yeah, and it's going to be the effects, folks, another 60 days, 90 days as to where this is going. Let's talk a little bit about mortgages. This is a big number you got on mortgages here.
Yeah, so mortgages and forbearance, we were at about 0.25%, right, 0.25% in the beginning of March. We're at 8% and rising now. The carnage in real estate, again, it's going to be a tail effect. The shutdown didn't necessarily immediately impact, residential or commercial real estate like it did restaurants.
Right.
As I look at malls, REITs, mortgages, I mean, those, again, the unemployment hit us so fast and so hard. It hasn't been gradual like we saw in 2008. I think, 60 days from now, real estate is going to be really toxic.
Yeah, right. No,
residential and commercial. I don't know if you saw, it just hit the wire right before I came on Twitter, just said employees are going to work from home forever. Right?
Yeah.
Is that the last time we're going to see that from a Fortune 500?
Right.
I mean, I know that's not residential. You ask for residential, but residential, commercial, what that does to the bond market, I mean, it's just going to restructure the whole thing, right? And that's what's going to be so fascinating to you and I and others as we go through the next 3, 6, 9 months. The whole thing is going to reposition because at the same time, on the back end, as you mentioned in the news update, you got the Fed now, buying ETFs, buying bonds, literally monetizing debt in this country, and that's just going to completely rebalance everything from a macro perspective financially in this country.
Right. And what Jason just brought up, folks, about Twitter just came across. They're going to let employees work from home permanently. This is permanently, folks, okay? And that's the commercial office building, man. Forget it, right? One second you're in heaven, the next second, let me tell you something. You start losing the Twitters of the world, the Apples of the world. That's why everything in San Francisco is $1 billion, man.
Right. And you want to talk about a bubble, right? So you just take San Francisco, right, which is a top 10 market in this country. But
yes.
I mean, huge escalation in price, residential and commercial.
Right.
Right. I mean, just massive double-digit annual escalation. And now you got Twitter. And by the way, it's such a competitive market for talent out there. Everybody's going to, we're going to see a cascade of announcements like this over the next week. I mean, that market's just going to collapse, right?
Yeah.
And, it'll come to places like Omaha or Dallas later, but you're going to see commercial just collapse. It's going to be painful to watch.
No, I agree, man. There's no doubt. Now the movies, you saw the rumor yesterday that Amazon, was looking to buy AMC. We'll see whether that's not going to happen. What do you think's going to happen in that business?
Yeah, I mean, it's a race to zero, probably accelerated by this crisis. You've seen a lot of folks be forced to go straight to the streaming platform with a free release because they can't monetize any other way. That was a bad business, in my opinion, over the last 5 years. Anytime you're subsidizing your basic economic model with, $15 Cokes or $10 Cokes and $50 popcorns, it's just you're just taking advantage of the last tranche of consumers that you have. That to me, that market goes to zero. I don't know what Amazon is trying to execute. They've also been rumored in convenience, but they haven't really executed on any type of retail storefront idea that they've had. Logistically, they're geniuses, the likes of which we've never seen. But I don't know that there's a lot there with the Amazon rumor. AMC could be obviously looking to sell, and if I'm an M&A advisor trying to sell, trying to do something with some assets, right? I'm going to float Amazon, the deepest pockets of the world. I don't see a lot to that.
We all want Amazon for business, right? There's no doubt.
I don't think there's going to be a transaction anytime in the near future. It's fun to think about, but
it's. I'll tell you, man. Between natural gas. Where we at natural gas?
So natural gas has come off its highs, right? We've got a huge swing trade between 165, 170, and 210. We reached 215 last week. We're back down around the lows. Weather's getting a little more mild. It was really cold in the Northeast. We'll talk next time. The natural gas equities have actually been the best sector since we hit the crash on the 23rd. Looks like CNX and AR up 100% in the last 4 weeks.
Okay.
We can talk about that next time.
Next segment, folks, Thursday, right here, 15:15. Jason, thanks so much, man. Have a great one. Safe one. Look forward to speaking to you Thursday. Thanks, man.
Love it.
Stay right